Okay, so what if I told you there's a brand new law that could let you keep thousands more from your fan tips completely tax-free? Yeah, for real. Today, we're going to dive into a total game changer of a tax break for creators and really break down what it means for your wallet. All right, picture this. You're live streaming, you're in the zone, and boom, a fan drops a $50 super chat. We all know the platform takes its cut, but after that, how much of it is actually yours? Well, thanks to this new law, that number is about to get a whole lot bigger than you're used to. Let's get into how this changes the math for you. So where is all this coming from? It's from a new piece of legislation with, let's just say, a very bold name, the One Big Beautiful Bill Act, or OBBBA for short. Now, this is a huge deal because it's basically the government finally saying, hey, we see you. It recognizes what all of us have known for years, that those super chats, those TikTok gifts, those PayPal donations, that's your tip jar. And now it gets its own special tax break. Okay, so how does this thing actually work? Let's get right to the good stuff, the part that affects your bottom line. Get ready for this number, $25,000. That is the absolute maximum amount of tip income you can deduct from your federal taxes every single year. And you know what the best part is? It's what they call an above-the-line deduction. Now, that's just tax speak, but what it really means is you get to take this deduction even if you take the standard deduction. You don't have to itemize. It's just a massive win. So simple. Okay, but here's the catch, and it's a big one. This isn't permanent. Not yet, anyway. Think of it more like a trial run. It kicks off for the 2025 tax year, and it's set to expire or sunset at the end of 2028. So we've got a limited window here. It's basically a test to see how this all plays out. We'll definitely circle back to what that means for the long haul. All right, so we've covered what this is and when it starts. Now for maybe the most important question for you. Who actually gets to take advantage of this? Let's see if you qualify. Now, this is really important. This tax break is designed for the working creator, not necessarily the mega influencers. There's an income cap. If you're filing as single, the deduction starts to phase out once your modified adjusted gross income, that's your MAGI, goes over $150,000. And if you're married and filing jointly, that number doubles to $300,000. And this is the part that is just so huge. For the very first time, the Treasury Department, the IRS, they've officially put digital content creators on the list of tipped professions. You're right there alongside bartenders, rideshare drivers, musicians, everyone. This is such a massive moment of validation, recognizing the creator economy as a real, legitimate part of the modern workforce. It's a big deal. So, you're a creator, you're under the income cap, great. But that's just step one. Now we have to get into the nitty-gritty of what the IRS actually calls a qualified tip. Not every dollar you make is going to count. The IRS definition really boils down to one key word: voluntary. The payment has to be totally optional. Your viewer, your fan, they have complete freedom to decide if they want to pay you and exactly how much they want to pay. It can't be a mandatory service charge or part of some policy. It really is just like a digital version of a tip jar on a counter. No pressure, no obligation. Okay, so this is probably the question on everyone's mind. How does this official definition translate to all the different ways we actually get paid online? Let's talk about your digital tip jar. And here's some really good news. The people who wrote this law were actually thinking about the 21st century. They specifically clarified that cash tips doesn't just mean green paper money. It explicitly includes electronic payments and even digital tokens, like Twitch bets or TikTok gifts, as long as they can be exchanged for a set cash value. So let's run down the list, shall we? That direct tip someone sends you through PayPal or Venmo? Yep, that counts. A super chat on YouTube? Check. Those Twitch bits or TikTok gifts your audience sends during a stream? You bet. Even those one-off voluntary support payments on Patreon or Ko-Fi can qualify. But, and this is a big but, brand deals, sponsorship fees, ad revenue, that's a hard no. Why? Because those are negotiated payments for a service. They aren't voluntary gifts from a fan. Okay, so now that you know what qualifies, we need to talk about how to do this right. Let's cover the rules you absolutely have to follow to make sure you stay compliant and avoid any critical mistakes. Let's just put this side by side because it's so important. A tip is optional, a brand deal is mandatory, part of a contract. A fan decides how much to tip, the payment for a brand deal is negotiated ahead of time. A tip is a gift for the content you're already making. A sponsorship is a payment for a specific ad read or video you have to deliver. One is deductible, the other is definitely not. And I'm telling you, mixing these two up is probably the single biggest and most dangerous mistake you can make with this new law.
And look, don't just take my word for it. Tax experts are already saying this is a huge compliance risk. You can be sure the IRS is going to be on the lookout for creators trying to game the system by claiming their sponsorship money is a tip. That's a massive red flag you do not want to raise.
All right, let's wrap up with a few final non-negotiable rules. First, you need a Social Security number to claim this. Second, if you're married, you have to file a joint tax return. Also, remember this deduction is only for your federal income tax. You still owe payroll taxes, that's Social Security and Medicare, on all that tip income. And maybe most important of all, keep detailed records. You have to separate your tip income from everything else. You need a clean paper trail. Which kind of brings us full circle, doesn't it? This whole thing is a 4-year experiment. It's basically a test run. It's a chance for the entire creator economy to prove its case and show how significant it is. So the big question isn't just about how much you'll save on your taxes next year. The real question is, when 2028 rolls around and this thing is set to expire, will we, as a community, have made the case for this to become a permanent fixture for creators? It's something to think about.